Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our second free report that I'm putting out this week. And this is for Thursday, May 4th, 2017. So I got a little bit of volatility today, up and down, and I think that had to do with the vote for the new healthcare plan, as well as we have our jobs numbers tomorrow. So we're expecting the volatility, and that's pretty much what is coming into play today. So in this more technical video today that I promised you guys, I'm gonna work off of what I did yesterday, off of the time, the sentiment, and the technicals, because I got a lot of emails as far as questions about it. So again, one of the things that I go by, and I know it works, because before I started sentiment timing with Woody, I was just your regular technical analysis person, and that's how I traded. That was what I told my members, what to go off of, and it worked. But there was often times that I was scratching my head as far as why something wasn't working out. And then when I started following Woody and we started this, what I found out was, the time aspect was what was missing. And when you combine that with sentiment, as far as when you get into those extremes, now what started happening was the wave counts, the divergences, the resistance, they all started working together. And that's one of the reasons why I'm so adamant about, you have to use the time period, because you don't know where price is going to turn if you don't know when it's going to turn. And it will give you false readings all the time. You find yourself chasing your tail. And, once you have that time aspect into it, everything else just kind of fits into place. You can work your technicals off of it. You can work your support, your resistance, your patterns. And once we start getting into the time period where the trend reversal is supposed to take place, that's when you start looking for the reversal and reasons to take the reversal. So one of the things that I want to show you on this is, and this is what I showed you last night, and what he was saying was that the kill zone was going to take place in March. So this was when we were expecting the micro kill zone, I should say, because it's always been a buy the dip, this one, but it was going to take place in March. Now, the reason why I'm showing you that is because this first all started back in November of 2016, and this was right after the elections. But prior to the elections, when you had everybody saying that the markets were going to crash if Trump got elected, and just giving you all the reasons why we're going to get a crash, Woody kept saying that he was expecting a post-election rally. Now, once the rally did start and it kicked in and he got confirmation, what was put out, and again, this is on the 17th, was that there wasn't a good decline scheduled until 2017. So the March didn't come in until 2017, but the broader aspect of things was that we were going to get a rally into 2017, and we could see 2300 and 2350. So why am I showing you that? Well, these were when the elections, right before the elections, right here, and then from there we had this massive rally. Now, if you're just going off of technicals and wave counts or whatever, this top right here, we started seeing bearish divergences. We are very overbought. So once you started seeing this, people were going to be shorting the market if you didn't know when to expect the turn. And again, this was, it was always going to be in 2017. And Woody had put down the 2300, 2350 as a target back in November. So again, when you're shorting here, this is the pain you had to go through. It was another 130 points. And this yellow thing is the time period that was looking for the reversal. And it ended up the 99% bullish sentiment came in exactly on March 1st. And that's when we identified that we were looking for a trading top. We had the bounce. And once that failed, that was your confirmation that we were getting a larger drop. And that's what took place. So my point is, the bearish, if you just use technicals, the bearish divergences, the oversold, all that just gave you false readings if you did not know that the top was supposed to be coming in this time period. So that's why the time is so important to know, because if you don't know, when to expect a top, And if you don't have sentiment that is backing up when the top is supposed to be made, you're going to be shorting these dips here and then end up seeing your 20, 30 points underwater when there's a gap up. So everything moves in cycles, and you just need to be able to to be able to ride these cycles up and down, and some cycles are going to be smaller, some are going to be bigger. I like trading the bigger cycles, the swing trades that last 4 to 6 weeks, because what you know from that is if you're a quick trader and say not just a buy and hold or short and hold, what you do is you can step out of a position, but if the trend is scheduled to be down, then what happens is you just close it at support, wait for it to bounce, and then short it again. But you just know that each one of your trades is going to be on the short side until we come up with what? When the time reversal is supposed to be to the upside. And we have, one thing that Woody has been saying the whole time is that, the downside, we were supposed to get downside into the 19th or the 20th. So this was, we had a lot of things that were looking for it, but the thing is this, and this is what I've been saying to a lot of people that had said, did I catch this move? And the answer is I didn't catch this move. And the reason why was there was the pattern that I was following was for an A, B, C, and what I was really looking for was this wave C to come someplace down into the 2300 range. So I wasn't aggressively short just because we were running into that time period to expect a reversal, but we still had the days where we could have had a flush out to the downside. So I held a small short position, and then once the gap up took place, I knew those were, done. I had to close them, and that was it. So now we're waiting for a top to come in. But the thing is, it's not set to come in yet. And the thing is we have the high dates labeled. Our members know exactly the dates that we're watching. So in the technical version, what I've been saying is, you don't want to press a direction right now because we're in a range, and until the 2400 gets taken out or until the 2379 on the downside gets taken out, we're within a trading range, and you have to trust it. And on a smaller range, which I'll show you on the charts, I have a range of 2390 to 2379. And when I was typing this, we are right near the 2390. Stochastics or momentum still had a ways to go to get into the overbought levels from the 15-minute. And if it took it out, then you need to watch for the 2394, 2398. So again, it wasn't looking for a breakout. It was just looking at where's the next resistance levels. Now, what I'd said, if the bulls fail to break above that, then we'd have to respect the fact that the lower end of the channel is going to come into play, and that's 2379. So I'm going to go to that chart right now and show you what I'm talking about. And this is the, I'm sorry, that's the 5 minute. I want to go to this. So here's the range that I'm talking about. We had a high, low, high, and we came pretty close to this low. It didn't make it right there, but the bulls failed to break above this to get to the 2394 and to the 2398. And what happens? We came all the way back down to the bottom of the range. The bears failed to push it through this to come down and close the gap at the 2375 and then come down to the 2369. So what happens? We're right back at the top of the channel. So if you're not trusting this range and we're getting these moves down, what happens if you don't know the time part of it, when to expect the big move, you start jumping on the short side because it broke a moving average or whatever technical analysis that you're using, but you're jumping on this right now for the crash only to watch it come all the way back up to the previous levels. And if you're back up here and you don't know when to expect a breakout, what happens is you start buying this and we come back down. So if you don't know to trust this range right now, then you're going to get caught, buying at the top and selling at the bottom or shorting at the bottom. And that's the part, that's the timepiece I think that is just so important is, I know right now, do I know, what exactly the markets are going to do into the potential turn date? No, we could break down, we could break up a little bit, but it's going to, if we end up coming down, what's going to happen is we're probably just going to widen the range, and it may come down to the, say the 2361 or here. What I know is I'm not looking for the crash yet because that's not set. And even the expected turn date that Woody is looking for,
that's not calling for a crash. It's going to be a move that's probably going to expand the range. So all we're doing right now, we're not looking for the huge move. We're looking for, okay, we're trading within this range, and once the range breaks, then we're going to expand it and see where the next range is until we get to the time period that is looking for the big move to the downside. Then you start getting aggressive on the short side. So right now, I've been saying stay in a trading style mode. When you have profits, don't wait for a breakdown, because it's probably not going to come. And if we're heading up, don't bank on a breakout right now until it comes. But the thing is that it can go either way, and it would make perfect sense. And I'm not going to fight it if it moves up. Me personally, I'd like to see it move up because I didn't get long on these gap ups here because I missed it, and the internals were not giving me, say, permission to jump long, and we've pretty much just gone sideways. So for me, I'm not really interested in the long side right here. So I'd rather see a pop up to the 2404, 2410, wherever it is, to build a short position, because what's going to happen is it's going to set up massive bearish divergences on the hourly chart. It's going to take our daily chart from, we didn't even get into the extreme oversold levels, but it's going to get us back into the overbought levels. And remember what I was showing you is that on it from an Elliott wave perspective, I'm looking for this wave 5 to complete so then we can have a larger wave 4. And that's the trade that I'm waiting for, and it may not come for a while, so I'll be able to trade either a smaller or a larger trading range. I'm not going to jump the gun and marry either side. I have no problem trading the long side if things are looking that way. And when we're at the top, I have no problem shorting at the top as long as everything is making sense. So right now, really the best thing that I can tell you for free information is we have some important, not important. We have some turn dates that are approaching, but it's not a black hole or a kill zone or anything like that. But the thing is with the size of the gaps that we've had to get up here, even a 3 or 5 day pullback could shed a lot of points off the S&P. I don't know that right now, but and all I would really be looking for is a push down to the 2340, something like that. And if it ends up coming down to the bottom of the range at the 2320, hey, great, because I'll be short when it gets there. But at that point, I'm not looking for a crash. I would be looking to buy down there for the move back up. So that's it. Until you know when to get aggressive on the short side, you stay in trade mode right now, because we're not looking for any big crash at this particular point. We're looking for a pullback that's going to start most likely on one of the turn dates that Woody has, and it's going to be just probably another buying opportunity if you just look long. So with that, hopefully this helps you out with what I put together yesterday. Have a great weekend, and I'll talk to you guys next week.